What's going on, everybody? Go ahead and give us a mic check and let us know if you can see the screen, and let me know what you can see on your screen. I don't know what freaking screen I am sharing at the moment. What's going on? How's everybody doing?
What do you got here? New little setup, or is this the same?
No, I mean, what are you looking at? I don't know what you.
I see level two. I see an option chain.
Oh shit. Okay.
I don't
Oops.
remember you having.
Got you.
Oh, you had the. There you go. This looks familiar now.
Gotcha. All right, what's going on, everybody? Let's get us some mic checks here. Let us know if we're coming in okay. We are waiting for our special guest, but while we go ahead and wait, let's just talk about the markets here. Obviously today, we had that news here about the North Korea, the pullout of the meeting here. And that kind of caused a little bit of panic. I was scared, man. I really was scared. I have some long-term like swings, and I say long-term because I'm gonna hold them for more than a fucking day. That's long-term for me right there. Jesus. That's long-term for your ass right there. So I got a bunch of Microsoft, and today I got out of all of my Netflix. Hopefully you guys caught that Netflix. Go ahead and shout us out if you grab some of that Netflix. Go ahead and send us your trade too. I'd love to hear some of the trades here that happen on the Netflix. But yeah, so far, Jesus, why don't we go ahead and go through a little bit of flow here and get everybody set up here for Maz coming in later.
Yeah, yeah, and we were talking about it a little bit on before we started the webinar how we might we probably have to get used to this, right? We're heading into the summer. It's not like things will liven up as we get deeper and deeper into the summer. We're gonna probably be dead on an intraday basis,
Yeah.
and you said it's not something you mentioned earlier to me, not something you have total confidence in because like the Netflix trade.
Yeah.
When you're gassed up, when you feel that good about, and you felt pretty good about that Netflix trade.
I felt really good about Netflix. Let's throw ahead and we'll take a look at the Netflix. And again, I know a lot of you guys here were in the Netflix as well. Netflix had like broke. It basically kind of broke out. And remember, like SPY has just been in this horrible range. It's been in this horrendous freaking range. And SPY looked like it was about to break out. And on this day where 274 got hit, the Netflix popped up as well. The Netflix popped up real nice as well and printed up towards 335, somewhere around there. And I'm like buying, I'm buying like 340 Junes and I'm buying 350 Julys, right? And I was like, okay, I'm going to keep buying this. I'm going to keep buying this shit. And I'm up a little bit on it. And then the next day, of course, we gapped the fuck lower. And actually, the last hour of that day, we just tanked. And then we gapped lower. And that shit's freaked me out completely. But off the open, the Netflix came right back to basically flat, right there at 332. And that was really your sign that, number one, there wasn't enough juice here to push down the market. And then number two, if they were going to buy anything, it was going to be this fucking Netflix. And the Netflix closed that day at fucking 345, and I was up like a good 30, 40 grand. So it was pretty wild. Pretty
Yeah,
wild.
but the way you played it, you mentioned you could have got a bigger bang for your buck in weeklies, but
Yep.
if that sell-off did stick for a day, it would have been tougher to hold and all that. So I think we're in that climate. We've been talking about it for probably a couple weeks now. That I think that's the safer, the better approach to take here. Where instead of trying to catch that big move over a short time span when you feel that high confidence trade that you think you could catch, give it a little more time just in case you may be early, just in case there's a headline that takes the market down on lower volume. Because a lot of this stuff, Luch, that we're hearing that's taking the market down on an intraday basis, this is all bullshit. This is all, we've
It's
been
bogus.
hearing the same
It's
song
bogus.
over
Yeah.
and over,
In the
Um,
heat of the moment, though, I mean, shit, especially when you got that kind of money on the line, I mean,
yeah.
especially with the SPY, like this is twice now, SPY has tried to sort of break 270 or break the lower end of the range and then come right the hell back. So we could
Yep.
just sit here in this range and random names just kind of get some love. This AMD kind of got some love here towards the end of the day. You got some semis here getting love again. The Nvidia and all this kind of stuff kind of coming back. Whereas some of the banks here are just horrible. A lot of the trading on the banks is just miserable. But at the same time, everything is very range bound. So to Jesus' point, things are going to be kind of difficult here. And if you're not that confident and you're playing options, I've moved to basically buying time. So for example, on this Microsoft here, like I'm in a July option here on this Microsoft, even though I'm only 2 fucking points away. I still just don't have the confidence to just go ahead and buy 100 strike on a damn weekly option and expect. I just don't have that kind of confidence right now. I don't have it, even though it fucking would have worked for Netflix. Shit.
Yeah, but again, it's easy to say that now, but and that's the thing that I was getting at is, as awful as the market and as dead as the market may look, the one thing we still have, okay, and if we lose this, then we got issues because we're going to be bored out of our minds. But the one thing we still have is underneath the hood, individual names like you mentioned are still in play. You know what I mean? There's still names out there that you can see outperformance where you don't have to rely on the market. Because right now, if you have to rely on the overall market as far as momentum, that's where the difficulties come into play. You know what I mean?
Take your single names. And by the way, like Jesus and some of the options order flow is so huge for finding those individual names, especially if you guys don't have screeners and things like that, to try to find volume names or, situations like that. So there's a lot of oil stuff that's been happening recently, MGM here, casinos here that have been really kind of active as well. And then just kind of off-brand names here that, we'll catch every once in a while. This Roku was a big mover today. And then that AMD, which I've been watching for a while, even though the market did definitely come back, this thing finally did break out. I don't know how much legs it has to the upside, but, there's a good amount of buying here. So, again, if you need the SPY to go with you, which, by the way, I fucking do, because I trade all the large cap names anyway, try to buy some freaking time, okay? So, with no further ado here, we got Mazmasta. Now, Mazmasta is quite the character here. This man is quite the character. I think he was introduced to me from Jesus. And Jesus was like, yo, I got one of my guys here. We got to get him in here. And I'm like, yo, who the fuck is this guy? And Jesus was like, no, don't worry. Let's just get him in here. And him and I kind of like, he's a character, man. He's a character. The boy is a character, and you will see on his Twitter feed too, where he'll go through a lot of rants. He'll kind of, he'll talk a good amount of shit, similar as both myself and Jesus. And then once kind of, I got accustomed to him and everything, it was all good here. So Jesus, how do you know him? And let's go ahead and bring him in.
Yeah, interesting. When I first got on Twitter, Maz was probably, I would say, the first trader on FinTwit that I click with. So what happened was, you got a certain personality, right? And you're not going to blend with everybody on social media. You know that. I mean, people annoy you, people rub you the wrong way, whatever the case may be. And especially when it comes to the market, okay? You got a lot of pikers out there. Let's be honest. You got a lot of pikers that treat the game like it's not gambling, and you're just not going to click. You don't have the same personality. So Maz was one of the first dudes that on Twitter that I actually clicked with. We were just I was posting. I was posting some flow. Talking about what I liked about it, and what I realized from him. Interestingly enough, what I remember, one of the first things. Like I would talk about the action and what I found interesting, and he'd be like, "Fuck it, let's buy it." You know what I mean? Like, I said, "Okay, this guy, he's a degenerate." You know what I mean? This guy's ready. He likes to roll the dice. He treats this game like you need to treat it. You know what I mean? It's only money. You're going to lose money. Don't put any more emotion behind it than that. And we just clicked, and we made some decent money together. And at the same time. While I was bringing the flow in, he's really knowledgeable when it comes to the biotech. Like he's my biotech guy. Anytime I have a question, I track I tracked down Maz and pretty much everybody in the room at this point. So, we worked well together, and little by little, time goes by, get closer and closer. But that's how, I didn't know him prior to that. I met him strictly off Twitter. One of the first traders I did meet.
Funny
we
thing
go way
about
back. Can you hear me?
Yeah,
you guys hear me?
Maz. So,
Yeah,
Maz,
we
I'm
hear
just
you,
going to
Maz.
intro you. Everybody, go ahead and a round of applause here for Mr. Mazmasta here. Let's go ahead and bring him in. Maz, what's going on? Give us a little intro about you yourself and your history sort of trading and how you came up on FinTwit and Mr. Wall Street Jesus here.
Sure, sounds good. How's my audio? You guys hear me okay?
Yeah, you're good, man. You're good. You sound a lot younger than I thought, man. I thought you were old, man. I thought you were going to be like 40, 50, 60.
33. I've been in this game a while. I was a broker from when I was 18. I was a metals broker. Then I became a futures broker. Did that for a while. Built up a nice book. Had some nice residual income. Started doing a lot of trading on my own. And basically it evolved from there. Now, first off, let me thank you guys for having me. I appreciate it. Lucci and Jesus, you guys are both my boys. And yeah, like Wall Street Jesus was saying, we go way back. I would say 2010, 2011 on Twitter, if not further.
That's a while. Yeah, that's a while. 6 years. So that's kind of what I wanted to intro you for, Maz. Like your sort of Twitter presence and what kind of flow you got out there, because I know you're pretty bold, man. You're pretty bold. You attack a lot of people. I wouldn't say attack, but I would say like you check a lot of people.
He tells it like it is. That's what it is. He's not afraid to say what's on his mind. He'll call you out if if you need to be called out. He'll call you out.
If I think you're bullshit, I will tell you I think you're bullshit. It's nothing personal. It's more just about this game that we play. There's so many contradictions. There's so many different things that I would consider ironic. And I'm just going to throw this quick example out there. I know a guy who doesn't really know anything about stocks, but he saw the first iPhone. So what did he do? He put all of his money in Apple. So some people might say, "Oh, what a stupid move," right? There's no risk management. It worked out great for him. Then you got these guys that are rocket scientists programming algos that lose money. So at the end of the day, basically what I would say is, it doesn't matter how smart you are. Words are definitions. Anyone can define a word however they want. So if someone's smart, that's their definition of smart. It doesn't matter. And when it comes to the stock market, a stock's either going up, down, or sideways. It's that simple. So I try and keep it really simple. My strategies have evolved over the years, obviously. I used to be extremely reckless, as Jesus would, he knows I was a degenerate. But when I was a broker, I had a nice steady source of income, so I could afford to take some risks.
Right.
2014, 2015, we had a biotech bubble. I basically lived to trade bubbles.
That was a beauty, right? That was a beauty, though.
Yes, and a couple different things happened at the same time. I met my now wife, who is now pregnant.
Well, I was just going to say, let me cut you off there, okay? Yeah. Listen, you were a cowboy, gunslinger, degenerate, whatever the hell label you want to put on it now. Okay, but I mean, you were young. You're still young. And now you're going to see, Maz. Now the world's going to start to turn on you. You got married. You're going to have a kid. Now you'll see what I was going through and the process I was going through when we first met. You know what I mean?
I do.
Like you, when I was younger, especially single, I mean, I was an animal. Exactly. But now things will change. You got a little one on the way. That becomes your whole life. So that's where Maz is headed. See, you're going to see that transformation, guys. Those of you on Twitter and in the room, you're going to see that metamorphosis. What is that? When the butterfly turns into
an evolution. That's how I would describe it best, as an evolution.
Yeah. From a degenerate to now, all right, let me take a step back and let me actually pay a little more attention to what I'm doing here.
Exactly. And, with risk, obviously, you need to be willing to take risk. And I find personally, I think a lot of people's problem is they're not really willing to take the risk that they have in a specific trade. If you're going to fire $1,000, $2,000 on some weekly options, you better be ready to eat that. And if you're firing off 5 positions of the same size and you got 10 grand on the line on weeklies, you better be ready to eat that. And if you're not, then you better not be trading weeklies. Right. And like Lucci was saying earlier, I used to do, and really it depends on the market. So I do still trade weeklies. I had some Netflix weeklies this week. They panned out pretty well.
Nice.
That weekly chart, monthly chart, day chart, everything said higher, and it was that simple. So, I try not to overcomplicate things at this point. The market, like I said, you could, write a complicated algo that does 100 million different things and follows 100 different markets to try and give you a signal, or you could just watch price and wait for, a setup. So
Yeah.
I use a lot of leading indicators. I don't like lagging indicators. I don't use stochastics, MACD. I mean, I do use McClellan on the S&P. That is the only lagging indicator I look at. Otherwise, it's all pivot points, Fibonacci's, previous support resistance, trend lines, and just clean technicals. I'm a technician. I've been reading charts since I know I'm only 33, but since I was 18, so 15 years I've been staring at these charts.
Yeah.
And when I was a futures broker, I saw it all. I saw guys, CTAs make 100% year after year and then blow out books.
And
I've
blow
seen
them out, right?
exactly, and it was all about that 22. They want that.
Yep.
They don't care if they end up blowing out. They're selling premium till finally it blows up in their face. I know guys that were doing that on S&P did not work out for them January and February. They had great track records, great Sharp ratios, but like I said, none of that matters, because if it's not legit, not real, it isn't. So my strategies as far as flow, I want to kind of jump into this because I have been, like we talked about, with following Jesus for a long time and following order flow for a long time. And I've looked at trade alert and option alert and all that stuff myself, but at the end of the day, I rely on Jesus because he reads it better than I do. And I learned that when I had trade alert also, but watch Jesus and how he reads the flow. So that's one of the main reasons why I'm in the Steamroom. Also, obviously, Lucci, we've developed a little bit of a relationship as well. You guys are both, I consider, friends of mine through FinTwit. And Twitter has changed a lot. Especially since the beginning days. And
I don't know if it's beginning days. I feel like the beginning days, like guys like us could connect on.
It was so much better. Yeah.
Like sort of an intellectual level, and then we could build something. And now, like, it's really a lot of quick hits. It's a lot of just people that pop up and then disappear. Like there's no, it just kind of got. I don't know. It just kind of got diluted here. But
it got crowded. It got bullet. So my thoughts on that are this: noise. Okay, let me talk about noise for a second. Sure. As a trader, you have got to get rid of the noise. I mean, Citron today, he came out, he hit Netflix, he hit some other stock, INGN. It's all noise. I mean, AVXS is a perfect example. He put a $5 target on that stock. That thing got bought out for $200 and something. So he was dead ass wrong, obviously, as people are in this world. You're never going to be right 100% of the time. But as far as overall in Twitter and the way it's evolved, I mean, I don't know what the exact root of it is. Maybe just a strong bull market. A lot of people think they're traders. They're going to get woken up really, really quickly at some point. I don't know when. But I'm a trend follower. So to me, the S&P, if you look at an S&P monthly chart, okay, has not broken a very long trend line. You could put the 10, 12 EMA on that thing. It has not broken it. So to me, we're still in an uptrend. Obviously, I'm looking at this chart right now. You see the S&P daily. We broke that triangle. Now we're flagging. I think higher. I could be wrong. That being said, I try and stick with my convictions. I've learned this, getting antsy in your pantsy is not going to help you. Getting emotional, and this is all so much easier said than done because we all know when you got money on the line.
100%. Let's drill down on that because I did notice too that you tend to be able to hold through your conviction a little bit more so than let's say the average trader. So one thing that I did notice was that you were able to flip like down here on the S&P, correct? You were able to flip down here, and are you still holding that position?
No, I did that. So I think it was an NQ futures position that I ended up having down there. And I put the death grip on that thing, and it was not easy. It doesn't. I mean, I can't say it doesn't get easier because it does get easier. You see things work, and they work for you, and then they become habit, right? So but unless you see it work yourself over and over again, you're not really going to believe. So was it an easy hold? No. But did it break my, did I follow my plan and really just force myself to stick to it? Yeah. And it ended up working out fantastic.
Right.
And just like those winners, I've had plenty of big losers. So I don't want to start, patting myself on the back. But at the end of the day, if you have a target for something, or you think XYZ is going here, then that's what you should trade. So one of the main reasons why I think people lose money in this market and trading is skewed risk reward. And what I mean by that is if you're risking 1,000 to make, let's say it's weekly calls, and you're buying for $1, you buy 10 of them, they go up to $1.60, you blow them out. Well, 2 days later they're at $10. You made a mistake. Even though you made money on the trade, you made a mistake and you skewed your risk reward because you took out 60 cents on that trade. Your risk was $1. So over time, if you skew that risk reward to a place where you're going to be essentially not capturing your upside to the degree you could be. And I'm not saying, buy 10, hold them all till $20, etc. But you got to try and be a little aggressive as far as taking profits, especially with options. Otherwise, you're going to. And another thing, just real quick, I want to just jump back on that. So that S&P chart that we saw, it had a nice rally higher. A lot of guys, this is a main mistake I see, so that's why I'm going to talk about it. They buy calls. They grow their account. Let's say you got a 25 grand account. You buy some calls down there at the lows, right? So we're at 261 or so in the S&P. We go up to 268. The guy turns his account 25 to 30 grand, right? 25 to 40, okay? But then he starts firing off into this chop range, and he's still trading weeklies, and he ends up buried in a bunch of weeklies, and now his 40 grand account starts dwindling and dwindling and dwindling, and before you know it, all of his profits gone and some of the capital he started with. So if not all of it, I have run a few different strategies. As far as the flow, I would say a great example is we saw some flow in ERX and XLE before we started seeing the DVN calls, CVX calls start hitting. And that to me was a clue, because they'll go after the ETF, and this isn't always, but a lot of times they'll go after the ETF. And we saw it with IBB. They were buying the IBB, I think they were July's. I'm guessing off the top of my head here. That was a few days ago, and then today we see a bunch of small cap bios just bust out and get loose. So there's a lot of different ways to use the flow. You can, as far as intraday, day trading it, you can do that also. You got to kind of know if it's Chevron, 1,000 block trade of June calls isn't going to move the stock.
Right.
Now, real quick, one thing that I've been seeing is we've been seeing some bank flow. It's been in June. And a bunch of people got caught in that bank trade. I'm one of them. I thought we were breaking out a few days ago. However, the 10-year pulled back. We corrected with the XLF, but we're still in the nice bull flag. We're still holding. Still, if you saw those June calls and you started firing off on weeklies, well, you're in trouble. So best to stick with the flow. And there were some momentum trades on that JP Morgan. I know those were hitting and hitting and hitting. So when you start seeing that, that's when you can jump on board on a day trade and just pound that thing and try and tail it and keep your stop tight, and then either let yourself get stopped out, sell at a pivot. There's a bunch of different ways to skin that cat.
Let me ask you this, Maz. Let me ask you this. So now, I know you were pretty familiar though with flow anyway, because you were a broker. That was another thing I forgot to touch on when you asked me about that, Lucci. He was a broker. I was a broker. So that was another thing we had in common. But, I always have my opinion, but I like to ask other people's opinion who have some experience with the flow and all. And I try to stress this a lot. Like a lot of people, especially we offer a trial 3 days. Like, you're going to come in 3 days. You're just going to basically get an outlook of what we're doing, what we're trying to achieve. You're not going to really get any sense or feel of what type of edge you really have off the flow in 3 days. But everything Maz has rattled off there, okay? And it's been quite a few things. But those are all things that have come by just sitting back and watching how the flow reacts, whether he trades it or not. You see, like one point he talks about Chevron, right? The same 1,000-lot sweeper may not have the same effect in Chevron as it will maybe one of the under-the-radar energy plays. For example, this is stuff that you just will learn as time goes on, day in, day out. Not every single thing you do in this game is actionable, and you got to try to make money off of. And that's something I see that a lot of people stress. Just in anything in this game, using any sort of edge, any sort of indicator, you got to get a feel for what works best for you, right? Luch, you learned that too early on. Like
100%. And I think the Maz background too has also, has been a great way to sort of evolve over the years. Like him and I believe, like have very similar backgrounds where, we kind of started out one way. Maybe for him it was trading biotechs, or maybe for him it was just kind of trading off a customer order flow, whatever the hell it was. And then all of a sudden, you're kind of building a strategy there for yourself. So, 100%. A couple things that he mentioned, I think were amazing here, and I want to drill down on. Guys, if you have any questions whatsoever for Maz here, just go ahead and send it out here. Maz, we got a bunch of questions here coming in for you. There's two things that I wanted to drill down here in particular. That were really just sort of options related. The first one was that when you take a trade and you have a target, it's just you got to be able to do the most with it. And I think that's like a big thing that a lot of people just can't evolve to, right? It's that kind of antsy in your pants kind of thing that you were just saying, right? So you've seen so many of your weekly options or your options go from, let's say, double in value back down to freaking zero, and then you've seen maybe 1 or 2 out of 10 go, 4x or 5x or even 10x or something like that. I guess could you expand a little bit more on that and how you were able to fight that? And that way it can give a lot of these people here a lot of help as far as the options related kind of thing. Like how are you able to kind of get rid of the sort of ants in your pants here and just have that sort of conviction? Any insights you can throw on that front?
Yeah, actually I got a really good one for you.
No doubt.
So if you take a position and you buy June calls, okay? What is the point? So first off, let me just say this. You should have separate accounts. If you're day trading, you should have an account for day trading. If you're doing options, you should have a separate account for options. If you're doing weeklies, you should have a separate account for weeklies.
And why are you saying that? You're saying that just to separate your emotions, just to separate your mental kind of strategy per account?
So one, yes, to see where you're good, what you're good at, first of all. So over time, you'll say, hey, my swing options account has been doing better than my day trading account or my weekly account. And, the market conditions can definitely impact performance over short periods of time in those different accounts. But this is what I was going to say, and this is one key thing. I buy a lot of June calls. I use IB. I need a code to log into my account. I don't even log into those accounts some days because I'm posted GTC where I want to be. And if I'm trading off a daily or a weekly chart, what the heck am I going to use a 15-minute chart and start, seeing a little 15-minute reversal and then start, you start second guessing, you start
the noise. Yep. Then you go into a snowball effect of just mental fucking bullshit you shake yourself up.
All too often.
Yeah.
I see swing traders. Okay. Yep. They got calls out 3 months.
Yep.
The stock's down a day later and intraday, and they're in panic mode. They're in panic mode already. And it's so true, when you're it's so true.
That's a combo of not accepting your risk and either being too big or just truly not understanding what you're doing as far as trading, because you are taking risk. And so there's a lot of
can I say this before you go on? I think this, Lucci, was another huge point he made in the same reference that you were talking about, okay? What he was talking about in reference to weeklies, right? And talking about how a lot of traders who trade weeklies, they get that little pop, they take it off the table, they run, and that's not the right move. Now, listen, okay?
It might be the right move for some.
Right, but here's when you know it's the right move, and here's how you know it's the wrong move, okay? Here's the important point he made. The important point he made is his approach when he goes into weeklies is that he expects that thing to go to zero on his ass.
100%.
That's what He's going in, his stop loss is 0. He's not saying, oh, if I down 20%, I'm going to pull the plug, because he knows it could be down 20% right at the open.
Right.
And he's
5 seconds after I buy it. Exactly.
Right. So what he says is
accepting
the risk.
So much easier said than done. You know, you got it takes practice, just like anything. You got to, you know, accept your risk. You got to hold and you got to execute. So,
but here's the important point, Maz, you made, and I wanted to stress to these guys. If he understands the options could go to 0, and that's his risk, right? He's risking the premium, and he risked $1 on those calls. What he's saying is, if he takes 20 cents off the table, he was risking $1 to make 20 cents. Okay, you don't have to be a mathematician to do the math. That the numbers aren't in your favor. You know, what kind of win ratio are you going to? What kind of clip are you going to hit at to be profitable? Okay, so you know, at the least, if you're risking that buck, you got to make a buck at the least, in my opinion. That's my opinion. Maybe
I agree, if not more. As far as weeklies, I mean, you can get smoked, obviously, with weeklies. Total positioning is so key. I mean, if we're talking about options accounts, cash on the side and everything like that, percentage of the account in options versus dry powder on the side, ready in case you get a pullback. You got to have that dry powder. If you're all of a sudden all in and the market's in a range and you got all your chips on the table, and I hate to use a poker analogy, but that's what we're going to do. You're all in, and there comes the ace on the river, splat, you're done. So then, and now you got to try again. You got to go.
And in this market,
page at this point, I saw one of those.
In this market, the ace on the river can come in any type of fucking way. I mean, today even, you know, you might have some news thing that comes out that gets you a little antsy in your pantsy here, and you're too heavy. So, Maz, you just explained my second question. There's a lot of questions that are coming in here that are asking you about position size, stops, and things like that. You basically answered it right there. A lot of you guys are just too heavy in some of these weekly options that you have you got no fucking choice. You got no choice. And on top of that, you don't even know how to hedge. So you're coming in these weekly options with your full fucking account size. You know, just because maybe you've seen 1 or 2, you know, double up or whatever the hell it is, it's so you can lose that so much quicker, you know, than you see it coming in.
Let's be honest. All right, let's be honest, the three of us here. Okay, 99% of the traders out there, okay, and this is by no means, I'm not picking on anybody, I'm not degrading any of you, I'm not talking down to 99% of the traders out there probably shouldn't be trading weeklies in the first place. You know what I mean? It shouldn't be part of their strategy until they really know the game. You know the option game. Maz is talking about his experience, right? And he's still talking with that disclaimer towards that weekly end. I mean, weeklies, we used to call it, Maz. I don't know if you remember. We talked about this initially when I first met you. You know, weeklies is like crystal ball trading. We used to call it, right?
Yeah,
you have a crystal ball. Not only do you think the stock is going to go higher, but you're saying it's going to go higher right now.
Right now, or I'm dead. Exactly.
Right. So think about the conviction you got to have to feel, you know, to have that confidence to put on a trade like that. And that's the only time you should be even playing around with weeklies. But you should get a feel for things first. And I think, like Lucci and Maz both said, a big issue amongst traders is they worry about how much money they're going to make, so they size up. You know what I mean?
It's just looking at that damn P&L. You look at that damn P&L too much.
They put their bloomers on any downtick, and you know all the emotions come into play, and everything's thrown out of whack. But they're all focused on the money to make.
Lucci mentioned P&L. That's another thing that I do not have on my screen at any point during
What's that?
My profit.
P&L. P&L.
Why have it? Net liquidity. You don't need it. You don't need to have that. If that is on your screen, I guarantee you, your eyes are wandering over to it, and you're looking at it. You're looking at the down 4K. You're looking at the up 3K. You're looking at the net liquidity. Oh, it was at 512,000 earlier. Now I'm at 511. Not 5. Who gives a whatever? I won't curse. Who cares? Okay. So focus on your setups. Focus on your ideas. Focus on your conviction. Focus on everything else. Don't focus on your net liquidity. Don't focus on your P&L. If you focus on everything else, then that's the only way that it'll actually come to fruition. I promise you, because I'm telling you, I've lived it. I've seen it.
And Lucci, this is what I told you, like I took a liking to with Maz initially, that, he treated the game, I come from a gambling background. Maz comes from a gambling background. So we got the same characteristics. So, you got to get to the point where you see your signals are there, whatever they are. Maz may have his own signals. I have mine. Lucci has his. Things that you have confidence in that will work, right? That's what signals ultimately are. Setups that you have confidence will work more than they won't. That's my definition of signals. When your signal fires, you have, there's no emotion. You're not nervous about it. You're firing. You know what you have at risk. If it's a loser, you know what you're going to lose. And, you have an idea of how much money you're looking to make. And there's nothing beyond that. That's the point you want to get to. And the first time I met Maz, from the first day, I realized that about him. You know what I mean? As long as the setup was there, he liked what he was seeing, the flow was there, boom. He wasn't thinking of, oh, what happens if I lose money on this one? What am I going to do? Maybe that's 2 in a row. That's not in his mind at all.
Does not matter at all. Exactly. And, another thing I see traders do is they'll have like a daily goal. Oh, I want to make $1,000 a day.
Yeah,
that's great. But if
I did that shit my first year, man. That shit was the worst.
Exactly. And so there are days when, $1,000 isn't enough. You should be going for way more than that. But there are also days where you should be playing defense. Step back. Be careful. I'm not saying don't execute your plan, but there are days to be aggressive. There are days not to be. There are days that the money is there. There are days that it's just not. Exactly. And so you got to accept that. So, as if you're like a 1 or 5 minute trader and whatever, and you can do that, which I can't. I don't trade off 1 or 5 minute charts at all. Mm-hmm. At the lowest, I'll drill down to a 15 minute. And that being said, that's for short-term trades. But I kind of lost my train of thought. But basically, what I was trying to explain is simply, you can't go into it with that mindset like, okay, this week I'm going to make 10 grand. Next week I'm going to make 10 grand. The week after that I'm going to make 10 grand. Because I promise you, it's not going to work like that.
It ain't going to happen. All right, let's switch gears here for a second here. Maz, we got a ton of freaking questions coming in here for you. So, guys, we're going to go through a couple of these questions here. Maz, let's before we take some of these questions here, let me just ask some sort of philosophical kind of thing. Like, where are you going after? Like, what's your goal here? I mean, you're only 33, just got married, you got the kid. What's the purpose out here? I mean, what does trading do for you? And then where are you trying to go? Where are you trying to take it?
Well, obviously, it opens up that freedom that everyone thinks and dreams about. But you got to make it a full-time job if you're really going to live it. If you're going to live the life of a trader, it's not, let me pop open my laptop while I'm on the beach in Cancun and make a quick $1,000 and then go back to doing whatever I'm doing. I mean, I grind, and there are days that are hard, there are days that are not, but it's always a grind. And does it get easier? Yeah, but it's never easy because the market's always changing. So if you're not evolving and changing with the market, then you're going to get left in the dust. Now, that doesn't mean that certain patterns don't play out repeatedly over time, because they do. I'm a pattern trader, and I love, Netflix is a perfect example of a beautiful pattern that, to me, it was only a matter of time before it broke to the upside. And so as far as, I'm not going to start talking about dollar amount, size, and things like that, but at the end of the day, I want to have a really nice life for my family. And that's the most important thing. And, nice. Long-term goals, there's some big numbers up there, looking to get to them. But you can't put the cart before the horse. Now, that being said, once you start attaining those shorter-term goals and you start seeing your longer-term goals pan out, then you can kind of look to the next level and say, okay, now that I've accomplished this, how do I expand upon my knowledge and utilize it and maybe size up or utilize different kinds of strategies, or, have a swing trade account and day trade. Because I am a degenerate to a degree. I will say, Jesus, I got to say this, as far as my overall, I can't say I take less risk, but as far as my ability to accept risk and things like that have evolved immensely over the years. And that just comes from doing this. That just comes from doing it every day. So yeah, I have some big goals, but you let them come to you, so to speak. And I hate sounding cliche because there's so many cliches in this game, but
true. But some of
you
them are
can't
real.
force
Some
it.
of them are real.
Yes, they are real. You cannot force it. And not everyone is made for this, but I'm telling you, most everyone can learn. And it's really interesting because I've been working with a kid in Georgia, the country, and he really knows nothing about trading. And I've taught him a few simple things, what to look for. Now he's really defensive with his capital because they don't have a lot of money over there, this specific family. But he's been deploying exactly what I've been teaching him and executing on that pretty much flawlessly because he knows no other way. I also worked with a guy who was trading for 8-9 years. He had so many bad habits. I would try and say, hey, maybe you should try and do this, do this, do this. And no matter what I said, he couldn't do it. So he was so ingrained in those bad habits, he couldn't pivot himself. He couldn't realize. So self-reflection is so important. You always got to look at yourself and say, what am I doing? What did I do there? What could I have done differently? And I guarantee you, when you start looking at your trades and saying, what could I have done differently there? What could I have done better here? What did I do great here? And you start really examining those, that is going to make you grow so much moving forward, because you're going to see, hey, this worked, that didn't. I fucked up there. I sold that too soon. I was looking for 352. I sold it at 349. Whatever.
So Maz is actually saying it very nice. In the chat room, I just tell people to go look in the mirror and tell themselves they're a fucking idiot. That's what I do. Maz is doing it pretty nicely.
Hey, I've done that. How many times? I can't tell you how many times I've looked in the mirror and said, "You are a fucking idiot." It happens. Everyone's an idiot.
But listen, as corny, now I'm going to get corny, but this is seriously like a lot of that traders that have the longevity to stick around. What it really comes down to, okay, every single one of them, like Maz mentioned, you have the money, like you always want to chase that money. And guys, trust me, when you get older, it's still that chase, but your wife and kids are going to spend it all anyway, so it doesn't matter. But what you're going to realize is it comes down to the passion behind the game. Like if you come and approach this game and you're not worried and concerned about how much money you're going to make right now, and you come in here and you're trying to learn and correct mistakes and fine tune, your talents on a consistent basis every day, eventually that money comes. And like Matt is saying, it takes the time, it takes the commitment, it takes the proper approach. And the proper approach, what it comes down to is, you know what? I can do something I love, which is gamble for a living, pretty much, and maybe make a living out of it. Or maybe you have a job and you're looking just to make side money, but you love trading. So it's what I realize. A lot of the people who stick around aren't focused on the money initially. The concentration is not there. 100%. They're really devoted to the approach more than the money.
100%. All right.
If you have a job and you're doing it, as a second job, so to speak, I think that's great. To not have the full risk as a full-time trader, because
the pressure,
the pressure to perform, and there's a minimum. I think personally, you shouldn't really be trading full-time. I won't even go into that, but simple facts are that you got to be focused on what you're trying to accomplish in the short term, and then obviously goal setting. So I'm not going to preach goal setting. I'm sure people know about goal setting, but you got to keep your head out of the clouds. You got to stay focused on what you can control, because at the end of the day, like Jesus was saying, we are gambling. You're trying to gamble with the edge in your favor, but that's what we're doing. So over time, you want to gamble with that edge, and then you want to see that edge. If you can't see it clearly, it isn't there. So I'm not going to harp on that anymore. I can't see the questions.
No. I'm going to send them. I'm going to shoot them over to you. All right. So before we start taking questions, guys, we got another master course coming in that starts on June 21st. So I'll go ahead and give you guys the link here for that. And again, just like we're just spitting all this knowledge here about psychology, about position sizing, and all this kind of stuff, you're going to get it all here in the master course. It's 12 live sessions plus 4 live tape reading sessions as well. And then you're also going to get interviews from guys like Maz. Jesus, of course, is involved as well. You'll get my writing strategy too, so go ahead and check the link out. Let's go ahead and start taking some of these questions here. We got a ton of these things. Let's see, Maz here. Steven is asking, for swing trades, do you have a systematic approach with respect to your option strikes, i.e. delta and days to expiration, or do you just wing it depending on the kind of setup? So is it instinctual, or do you use, you know, the Greeks and you know, things like that to select what strike you're going after and then what expiration you're going after?
So that's a great question. Do I look at Greeks? Not anymore. I don't.
Yeah, I don't either. I don't either.
Did I used to? I mean, I was, like I said, I was a futures and I was an options broker, so I could break down Greeks for you. But you don't need them. I don't think, at least I don't need them. Now, if I'm looking at a certain strike or a certain month, yes. If I have a trend that I'm following, I might use a trend line and say, okay, this thing, if it holds this trend, will be at blah, blah, blah by X date. So I need to make sure that I cover that time. So in case I see a dip or whatever. So yeah, do I use a systematic approach towards my expirations? Absolutely.
But you're looking at the setup, right?
Yeah, he's looking at the setup and where the stock is. Yeah.
Right.
Yeah. Exactly. So do I define it by Greeks? No, I don't. Now, if I feel like volatility, or if I say to myself, man, that option looks pricey, then yeah, maybe I'll take a look at the Greeks and see what's going on. If there's earnings or if there's some kind of event, I'll try and figure out maybe why the IV is jacked or, you know, what's going on there. But typically, you know, the premiums are the premiums. That's all, you know, that's what they are. And I buy my strikes dependent on my risk reward, where I feel it's going. And I, you know, like Jesus was saying, if you're going to risk $1, you better be trying to make at least $1. And you know, if you're risking 15 cents on a day trade, you got to be trying to at least make 15 cents.
Yeah, and that's, guys, that's for any style of trading. Like for me, when I'm day trading equities, okay, and let's say I see sweeper activity coming into XYZ, all right, and I think, all right, I'm saying to myself, I'm going to risk 50 cents on this name. I'm looking for 50 cents to the upside at the minimum. You know, that's what I'm looking for. Because you got to understand, like we were stressing we have stressed numerous occasions, not every single name is going to be a winner. And eventually you're going to have to figure out, at the clip you hit at in different type of market conditions, et cetera, in the long run, you know, what kind of ratio you need to hit at. What, you know, you got to do the math to figure out a way to become profitable. I mean, that's what it comes down to. And if you're risking $1 to make 15 cents, I got news for you. You need a lot of math there. You know, it's not going to work out.
Okay. Next question.
About market
yeah,
conditions.
sure, man.
I'm just going to throw this in there. If it's not your market, stay the heck out of it. If you're a momentum trader and the market's chopping, then maybe you shouldn't be trading that day. So that's another thing, because I am a momentum guy. I like following the momentum. I like following. So January and February, I would say I got kind of lucky. I could have gotten cracked pretty good, and luckily I did. But I don't, you know, I don't want to say it's, I'll just say I got lucky. Let's just leave it at that.
No doubt, no doubt. That actually leads into this next question. So MJ here, who is also a member of the Steamroom here, she's saying what type of bad habits are the most detrimental? I think you just hit on one where you can't separate yourself from the market that you know it ain't gonna fucking pay you. But I'm assuming, Maz, like you figured that out with experience, right? Experience has told you that, hey, if this shit ain't my market, I'm okay stepping away. Like I'm okay stepping away from my ego and the pride or whatever, and you know, trying to hit a freaking home run every single day, that I can just go ahead and step away. I would say that's a pretty pretty bad habit. What else you got as far as bad habits there, Maz, that are most detrimental?
So I will preach skewed risk reward till I'm blue in the face.
No doubt.
The most common mistake I see people make. Is you got skewed risk reward and you don't even know it. So I would say everyone examine what kind of risk you're taking. You know, as you grow your account, if you're like a long trader, if you're a long, I shouldn't say long only trader, but if you're positioning long and the market's moving higher and you're making money and you're an option trader, you should be putting cash on the side as the market goes higher. You shouldn't be redeploying all your capital into the market as it goes higher, because your edge was down there at the bottom. You hit it, good. Get out of the way, either send some of that money home, which I advise send that shit home, or just leave it on the side.
That's one thing I realized since this trading room chat room. That is
take it to the bank.
The problem with is they'll nail, like we'll get the sentiment signals line up, right? Everyone leaning on the bearish side. We get flow turning. We play for the squeeze. We nail it nice. And as this market continues to go higher, they have to chase something. You know what I mean?
Exactly.
Even if it's the same name. Even if it's the same name as they climb the ladder and they'll play the same name at the same clip up and up and up until they get caught.
Well, I know because I've done it.
We've all done
I have made all these mistakes. I've made so many mistakes. I instead of a journal, I used to keep a mistakes book, and I still have it. It's literally over 100 pages. And then I realized I was writing the same shit over and over again. So once I reflected on that, and like I was saying, it was really all skewed risk reward. Once I really drilled down on it. So that being said, and also like I said, keep firing as the market goes higher. Well, that's when you got to be taking money off the table, getting it almost out of your hands so you can't touch it. So sending it back to the bank, moving it to a different account where you're going to maybe buy something and hold it, and you got a monthly chart you're going to trade, and you like whatever stock long term, and you want to take a position in that. There's so many different ways to do that. So I'm not going to tell people exactly what to do, but I'm going to tell you that as you get your, if you grow your account, don't be compounding your risk as you go higher.
Right.
Because it's only a matter of time.
I mean, one thing you get cocky on, and bias sets in with everybody. So that's another bad habit. Another bad habit right there is your bias. Bias to me, I mean, while Maz is saying the skewed risk to reward, on the top of my list is always bias. Whenever I'm biased, I'm frozen. I can't make the decision that I need to make in the split seconds that I have to make it. And if I can't make it at those times, we're talking about fucking options here. I ain't getting my price back. I'm not getting my price back. And if I got size, I ain't finding no fucking buyer who's going to take all my size out. You know what I mean? So that's a big thing for me. So we got a couple more questions here. Maz Ranchero here, who's another member of the Steam Room here, is saying Maz has said he doesn't write. Is this because of his past experience, or is it just your mindset? Like, how come you don't? Do you write options, or if not, like
I don't. I do not write against anything, and the reason is every time I write against the position, it goes the wrong way. If I am long Junes and I sell weeklies because I am, just to try and get back some cash, I have a lot of money out there or whatever, and I decide, hey, let me sell some weeklies. Well, the next thing I know, those are in the money, and I'm like, son of a bitch, I should have just left my June. So I've made that mistake too many times to know that I'm just simply not a good option writer. So that's it. I'm not good at it. I don't do it.
That's and that's again, I'm not to beat a dead horse, but everybody's different, man. Everybody's different.
I know guys who write against positions and they do great. They they make these complex spreads, and that's just not how I can't do it. I just can't keep track of craziness.
Know what you're good at, guys. Know what you're fucking good at, and know what you suck at. That's the end of that one. So the last question here we'll take, and by the way, we're getting tons of other questions. We're going to take these questions and try to email them back to you as well. So let's see. We got Anwar here saying, what's your percentage split between swing and your day trading or your weeklies account? What's your does that even matter, would you say, or do you have a specific way of going about it?
On average, man. I know it depends.
It's a good question, but at the end of the day, it varies because, if I feel like, we're setting up. So if I have X amount of dollars in my weekly trading option account, I'm not necessarily. It's never all in. It's never going to be. But there may be times where I'm feeling a little more bullish in the very short term because of what I'm seeing. So I might have a little more exposure on the weekly side. So
and you're a degenerate. So
Exactly. So and that's definitely been established over time, and you'd see it from my track record. But no, I mean you can't. So there's so many things you can't quantify in this game, and that's another thing is being able to quantify something and really define it is difficult. And so for me, as far as what I'm looking to swing and what I'm looking to hold or whatever, it really varies on the market. When we were getting really volatile back in February, March, I got kind of shy and I had a lot of money on the side. And did I miss out on some opportunities? I did. Is that okay with me?
I got a question for you. Maybe this will answer. Early on in the, let's say early on in your trend, well, a trend in your setup, right? Is that where you're looking for max exposure there? Obviously, that's the start of your, the starting point of your trend. So that's basically a point where you'll have swings and you look to attack some weeklies, but then as the trend, let's say, gets a little longer in the tooth, you'll get rid of swings or get rid of the weekly end?
Both. It's it really all depends. So like I said, my swing accounts, GTCs are your best friend. And I promise you that if you have an idea and you say, okay, this is going here, put a GTC and just leave it and see if it works. Because if you can't do that, then you were taking too much risk. If you're, watching it and you can't deal with maybe a loser. So, it really is all about what works for you. But yeah, as when we rip, so I use the 5 EMA, okay, the 5-day exponential moving average. The S&P gets way ahead of that, and you could see that. So that top right there on that SPY where we hit 273, exactly right there, we were extended away from the 5 EMA. I don't want a shitload of long exposure there because historically, and it doesn't take a genius to figure this out, if you look at a chart of the S&P, when we get extended away from the 5 EMA, let it go sideways, let it pull back for you. Let the market come to you. And it's all well and good until you're buying those highs and you're plowing all this because you just had a great trade. You just made 20 grand. Oh man, I'm so good. And your biggest losers always come after your biggest winners.
Always.
Yep. Always.
And so literally I came into today thinking that exact thought process in my head. I said, because I had a nice hit on Netflix, really nice. And I said, okay, this was a windfall trade. Keep your head in check. You're not God. You're going to, if you don't realize that was just a trade and you took the setup, whatever, you got to keep your feet on the ground. You got to stay grounded. And so that's really how I kind of determine my exposure.
All right. Last question. We're going to end this off here, and this is a really good question that I think all of us can answer here. Again, guys, you can check Maz out on Twitter. If you don't follow him already, you can find him at Mazmasta, or you can come check us out in the room. He's pretty active. He was pretty active until he had the baby, and now I don't know what the fuck. I don't know where the hell he's at, but he is quite active here in the room. Last question here is: when you started trading on your own, how did you push through from spinning your wheels to being consistently profitable? And there's so many ways, obviously, to answer this question. You could either scoff at it and be like, consistently profitable is a fucking myth. There's so many different ways that you could look at this. But Maz, let's go ahead and start with you, man. Like, what was it that pushed you through, from just spinning your wheels? And I think you're gonna go to that speculate your risk to reward thing. That's where I think you're gonna go.
Well, yeah, and I didn't go full time until I was, until I really knew, because you got to know for sure that you can do this for a living, because
no doubt.
You got to have a certain type of personality. You got to know yourself inside and out.
So how'd you know? What was it for you? How did you know? How did you know that? And what was the point at which you were just like, fuck it, that's it, I'm out, and I'm focusing all my time and effort on this shit?
Well, it was a combination of a few things. I was kind of, I wouldn't say forced, but I had a residual income as a broker that was quite high.
Sure.
And that started getting knocked down. And in the meantime, I was trading really well. So as I was trading really well, and as as my residual started getting knocked down, I realized, well, hey, maybe I should try and make a switch. Now, did I have a lot of fear at the time? Not really, because I was young, and God forbid, worst case scenario, it didn't really matter.
True.
So I was able to take that risk where not everyone is. And so that being said, if you can take that risk and try and do that, I didn't have like a trigger moment that I was like, okay, drop everything and, now I'm full time. It was an evolution. And so as when I was younger and I would trade, I was making a lot of money, whatever, I would fire off all these, trades, and I'd have great weeks, and then I'd follow them up with disastrous weeks.
Yeah.
I don't think anyone has blown out as many accounts as me when I was in my 20s. It's almost ridiculous. But in retrospect, you learn from that, and then you grow from that, and was I in some bad habits and I had to shake them? Absolutely.
Yep.
Is there a secret sauce that you know, like, okay, I can do this, oh, I can't? I would say no, there is not, because
I would agree.
just like you said, you know, at any time, this market, it's
You never
consistent
know.
profit. So I see these guys, they say, oh yeah, I have this algo that it made me 100% last year.
Yeah,
And
Yep.
in my head, I'm thinking,
last year.
that's great, dude. Wait till it blows you up. And because it will. It really will. And that's the thing is,
So many people out there right now basing it off last year.
Guys, I invested several $100,000s in a fucking algo, which had great fucking track record and all the prestige and whatsoever, and all the backing and everything, and it still went to fucking shit. You are only as good as your code, and you are only as good as your last motherfucking trade. And if you ain't on it, if you're not on it, and if you're not in this game, as Jesus saying, the passion, or as Maz was saying, like if you're not taking it seriously, and you think you're just gonna roll in and make $1,000 a day, that shit ain't gonna happen for you.
Yeah.
You know, so you'll get the real stuff.
This thing like a real job. You got to treat it like a real job. You can't think of it as anything different than that. If you're taking this on as a career, that's what it is. You got to be completely involved. You cannot just fly by the seat of your pants and hope, because it's not going to work out. I just know, I can tell you already. And
Indeed.
But if you focus and you drill down and you stay, you know, really, I mean, I don't want to keep saying focus, but I'm trying to think of the word. It's like right on the tip of my tongue. But when you're involved and when you're really living it and you breathe the markets and you say, okay, this is definitely what I love. Yep. And even though there are days you hate it, there are days you're going to hate it. I promise.
Yes,
but there are days you're going to love it. You got to have that passion. And if you don't, best of luck.
No doubt. No doubt. All right, guys, we're going to close it up here. Again, you can find Mazmasta on Twitter at Mazmasta. We got a master course coming out, starts on June 25th. We got a little bit of a discount going, so go ahead and check out the link. You guys have it all there with you. Maz, thank you very much for joining us, man. We'd love to do this again. I didn't know you were this fucking young, man. I didn't know you were this fucking young. This is crazy. I'm fucking 34. What am I? 34, about to turn 35, man. It's crazy. Crazy. We got a lot of parallels here.
You're the same age.
Same age, man. So we gotta connect, Maz. We'll talk more, man.
For sure. I appreciate you guys having me.
I'll see you tomorrow, then, Maz. Be good, everybody.
Sounds good. You guys have a great night.